Have you tried all kinds of strategies but nothing has worked? If you're watching this video, then you are probably struggling to pass your funding challenge. I'm going to give you a step-by-step, rule-based strategy that will guarantee you passing your next challenge, if you follow it and watch this video carefully. My name is Jules. I've been trading for more than 5 years. I'm currently funded with ftmo and CFT, and I enjoy helping other traders get funded. So we are going to divide this video into 3 parts. Part 1. Which market to trade, and is this market ready for the move? Part 2. Are the technicals aligning for this market, and how do we enter our trade? Step number 3. How much are we going to risk? How are we going to manage this trade, and how are we going to add to our position? Let's start with part 1. And in order to simplify this, I'm going to show you a trade I took on New Zealand and follow it step by step exactly how I did it to pass my challenge. Now let's look into TradeStation. And we use TradeStation because we have the unadjusted charts and they could be different from the adjusted charts. As we mentioned, step number 1 is finding if the market is ready. And how do we do that? We need at least 3 things to align in order for us to know that this market is ready for the move. Now, number 1, we're going to check the COT data, which is very important data to be aligning with our bias. If we come here, we can see that I took this trade around this time, right? And around this time, we can see that the commercials were very bearish. If we actually put an horizontal line right here, okay, we can see when were they this bearish before. So the last time is here, and look at the bearish move we saw. Same here, look at the bearish move we saw. So this is in our favor that New Zealand is gonna go lower. This is our first signal. It's not the only thing, because in the COT we have multiple people, which is the retailers also and the large speculators. So the large speculators are also very bullish, which is in our favor because the large speculators are always wrong. Now, just to remember, we are checking if this market is ready, and COT altogether is just one. It's not each part of this is one extra confluence. No, if all of it align, it's one signal for us. Just the COT data is in our favor. All right. And here the large speculators, the last time they were this bullish, let's check. The last time it was here as well and here as well when we saw these two moves. Okay, these two align with us, right? The retailers were also bullish. As we see, when they were at this point, we had this big bearish move, and when they were high, we also have the big bearish move as well as here. All right, so this is step number 1, right? We know that the COT is in our favor. This is the index, which is in percentage based, and we have also that they were very bearish, the speculators were very bullish, as well as the retailers. This is number 1, we check it. Now we can go to the seasonal and check also if it's gonna give us a sign that we're gonna go lower. So this is the area where we were looking at, and we can see that we were gonna go higher. It was not ready yet, we were gonna go higher. But the seasonal is not always accurate for the exact time. That's why we see after it a big move downwards. And this is a good sign because, as I mentioned, the seasonal is not always accurate to the exact date. It could be a little bit to the back or a little bit to the front, but it's a guide for us, right? So this is also, I would take it as a signal to that we are going lower, because we have a big bearish move that happened every month for the past 30 years on average, right? So this is great confluence for us. This is number 2. We need one more in order to go to the technicals. This is why I'm saying this is rule based. First of all, we have to check these, and those are very objective. If they are going down, if we have the retail is bullish, the commercial is bearish, these are all objective, right? We can see them. If they are okay, if they are not, we change the market, we go to another market. And this is why I picked New Zealand, because it was ready at that time. At the time of this recording, we have something else ready. So this is why we do not trade one market, we trade many markets. And if you are on the higher time frame, then they will all act the same way, right? So now we're gonna check tool number 3, which is our forecaster. If we go here and check around this time where we were looking at the trade, we can see that we are expecting a big downward move, right? Look, from here to here, this is all a downward move. So this is a great confluence that's on our side. Now we have 3 of them together with us, which means we have the ability to go to the technical side and time the market to know when exactly are we going to enter. I'm gonna also show you the valuation because it's could be with us as well, which is around this time. All right, and the valuation was not overvalued. We were not overvalued in relation to the dollar. So this valuation acts, we cannot be overvalued or undervalued in relation to the dollar because it's the dominant currency. So we are trading New Zealand and we're gonna compare it to the dollar. If we are trading silver or platinum, we're gonna compare it to gold, right? And here we're gonna compare it to the blue line, which is the dollar. And here we were not overvalued, which would have been great. We were in the middle, around the middle, right? Which is not against us, but not with us. So it's fine. We still have our 3 confluences, which gives us the ability to move to the technicals, which is what we are going to do now. Okay, if you're wondering how you can get access to all these tools that I just showed you, you can access my free community on school, and right now I offer the COT indicators all for free, and I'm gonna also add all these tools that I showed you. So if you're interested, I'm gonna leave the link in the bio. It's totally free. Now step 2 is the technicals. We come here to the daily on New Zealand USD. So we were basically checking New Zealand, and New Zealand showed us that it is bearish. New Zealand USD, that means we're gonna short it, right? And we come first to the higher time frame. We can look at the weekly, and this is step number 1, is checking if we are at a supply or demand area, resistance, support, order block, whatever you want to call it, but checking if we are at an area which we have seen a reaction from before. And over here we can see that when we came here, we reacted, right? And now we came back here to this area and we expect a reaction again. And this means on the weekly we are protected. The step number 1 is finding the higher time frame that we are protected. Okay. Step number 2, which is a good confluence, is trying to find if there is low resistance areas below us. And what I mean by low resistance is something like this, that the price didn't go and take the liquidity from and then go higher. We also have this right here, nothing came below it. So those are good areas to target. Now step number 3, I would like to always take my entry. Sometimes I could take it on the daily, but most of the time I take it on the 4-hour. And to keep it very simple, I tried so many strategies, but to keep it very simple, I just decided to put a trend line. Some of you might be, oh my god, yes, it has been working great for me, but this trend line is not trend line, it's just a qualified trend line with rules that I follow. If everything aligns, I take the trade. Because how I thought about it is I'm not predicting it, I'm just reacting, right? So step number 1 took me to step number 2, and now I'm just reacting to price when it moves in my favor. So all of those aligned give me the confidence to hold, even if I enter at the reaction, not at the top of the move, right? It's still gonna give me a great risk to reward because the moves are not small. We are on the 4-hour, but we actually analyzed on the weekly, on the daily. So the moves are significant. This is why I would enter basically right here, especially when we closed below, let's say, the moving average right here. It's significant when we close below it, and we put our stop loss just above this area. Now something also I always like to see is when we come to an area like this and react. This is also a big confluence for me that I have seen. happening over and over. Now, if we want to make this into 3 steps, which what I use, we are at the position where we've seen the higher time frame react from. Okay, we have low resistance areas below us, and step number 3 is our trend line and our MA both together get reacted. This is when I would enter the trade. Entering the trade, and this takes me to step number 3, which is how do I manage this position. Now, when I dissect it into steps, 3 steps, this makes it easier on my mind. Like, okay, step 1's done, step 2 is done, now step 3, right? It's just keep it systematic, and for each step there's rules. Step number 1, I had my 3 confluences. Step number 2, I had also my 3 confluences. Now, step number 3, where would I put my target? And since we actually analyze on the higher time frame, then it makes sense to also look at it on the higher time frame. And I would go below this area as a first target, and then I would go below this area at the second target, because these are the 2 areas that I have not seen liquidity grab below them. This is my first TP and this is my second TP. But if I want to do it first, I will do this. So now we took this trade, and all we have to do is manage it. What happens here? We are gonna go below this area first, and many times when we go below this area, we could see a reaction. Now, if you keep looking at your chart, then this is gonna be triggering because you are up 1.2 and the price could retrace. And like, for example, as it happened here, and when it happens, it's different when it's happening in real time than when we see it now. And many times, like, okay, if we close body, this gives us a good conviction that we're gonna go lower. So this is one rule to add. If we body close below the wick, then okay, we just stay in the trade. Now, sometimes it goes wick and then goes back up. Many times it goes back down. And here we have to make the decision based on rules if we are gonna stay in the trade or not. Okay, and how we think about it is, did we take any of our liquidity? No. Then we should not worry. We should just stick to our bias, stay in the trade. You can go to break even, but sometimes it will take you out. So this is what we have to understand. Do we want higher win rate or do we want higher risk to reward? We cannot choose one or the other. You have to choose one of them. One has to be more than the other. For example, I like to have higher win rate. Okay, I like to win more than I lose. So maybe I would go to break even right here. If it takes me out, I can live with it. Sometimes it takes me out and sometimes it just keep going. It's the best when it keeps going, definitely. We don't have to deal with this. So our target is the low resistance liquidity. If it reaches this area, okay, it's up to you. We are here to make money. We're not here to be right. So up to you. You can take some of your position here and that's it. Or you can hold it to go lower. Okay, now we can take some of the profits and we can keep going with the trade. Now this is if we took only one position in this trade, right? As you can see, this was a big move downwards. Could we add to it, especially since we have our stop loss and break even, so we are risk free? Can we go maybe to another time frame and add to it? Can we go to the 15 minutes and add to this position? Now I have many entry criterias for continuations. Okay, I share these with my community on school, so if you want, just it's free, totally free. You can join it and you can ask me anything. But basically, you can see that were so many opportunities to enter. So sometimes all you need, if we risk 2% here and we put another 1% here, all we need is 1 or 2 trades to pass a funding challenge. We do not need too much. You just wait for the right opportunity. And this is one opportunity. Every week we have at least 1 or 2 opportunities that we can leverage on. If you want to see how I use my step number 1 that I showed you in more details, then watch this video right here. I go through it in details.